I'm Kaylee Lines, and you're watching Bloomberg Technology. Here's a check of your first word news. President Trump says his planned meeting with North Korea's Kim Jong-un is looking increasingly like a go.
The summit is going to happen. They very much want it. We certainly would like to see it. I think the summit will happen. And personally, I think it's going to be a success, but we'll see. I will say this. If it's not a success, got to get rid of the nuclear weapons. If it's not a success, I will respectfully leave. It's very simple.
In Jordan, Secretary of State Mike Pompeo says a resolution to the Israeli-Palestinian conflict is still a top priority. The U.S. has been criticized for recognizing Jerusalem as Israel's capital. Pompeo also called on the Palestinians to return to peace talks. The adult film actress who claims she had an affair with President Trump is escalating her legal fight. Stephanie Clifford, also known as Stormy Daniels, filed a defamation lawsuit against the president in federal court in New York today. And a family spokesman says former President George H.W. Bush will remain hospitalized as he recovers from an infection. Mr. Bush was admitted April 22nd after attending former First Lady Barbara Bush's funeral. Global news 24 hours a day, on air and at TikTok on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Kaylee Lyons. This is Bloomberg, and you're watching Bloomberg Technology.
And this is Bloomberg Technology. Coming up, we are live at the Milken Institute Global Conference in Beverly Hills, California, where we've been speaking with some of the top newsmakers. Stay tuned for interviews with Microsoft's John Thompson and U.S. Treasury Secretary Steven Mnuchin. Plus, after several false starts, T-Mobile is buying Sprint for $26.5 billion in stock to take on Verizon and AT&T, though some still fear the deal will get blocked. We are going to hear from T-Mobile CEO John Legere. Just around the corner, investors will finally have an answer to the question, did iPhone 10 sales live up to the hype? But first, to our lead. Shares of Sprint tumbling more than 10% on concerns that antitrust regulators may reject T-Mobile's agreement to buy the company for $26.5 billion. The deal would reduce the wireless industry in the United States to 3 major competitors. T-Mobile and Sprint are hoping the combination would let them get a jump on Verizon and AT&T when it comes to building a next-generation network. Earlier today, Bloomberg's Vonnie Quinn sat down with T-Mobile CEO John Legere to talk about the deal. Take a listen.
What we've got, and today's the start of doing two things. One is talk about this deal, talk about the value to shareholders. And the second is talk about why now and how it's going to get approved. Those two things together will drive shareholder value. This deal, you said $26.5 billion. It's actually a $145 billion enterprise value combined company. What we're going to have starting from day one is $75 billion of top line revenue, $55 to $57 billion of service revenue that's going to grow 2 to 4% compound annual. EBITDA will start at 22 to 23 billion, and it'll be up to margins of 55 to 57%. The fun part is the synergies are $43 billion with a $6 billion run rate, and the cash flow by 2025 will be 16 to 18 billion. So if you're a shareholder, this has huge value. Now, what's happening is people are asking the question, why now, and will it get approved? Now, that's my job starting day one. I am so confident of the plan that we've got. It's in 3 buckets why Washington, and I'm going to be there right after we finish. I'm going down there, and I'm going to be there quite a bit. So what we got is this. 3 points. What's different now? 5G. 5G is an imperative. The nation's leadership in 5G is at stake. We've fallen behind to China, and T-Mobile and Sprint together is the only company that can change that. So 5G is critical for the country. We're going to change that. Second, the Un-carrier. We're going to supercharge the Un-carrier. What we've said is that customers can look forward to a broader range of service, more rural competition, more broadband competition, lower prices, and last of the 3, jobs will go up.
Right.
So that's why it's going to get approved. And when that happens, the shareholder prices.
So these are the three pillars of what you're going to pitch to regulators.
Right.
A job-positive merger.
Yep.
You said 1,000 jobs
though,
in the
right?
next 18 months alone, right? Benefits to the consumer, particularly the rural consumer, and we know the administration
Business
has already
customers.
signed an EO on broadband, so
Right.
that's something squarely in the administration's court. And fending off China and Korea, I like how you threw Korea in there, on 5G.
Yep.
Will that be enough to sway a regulator that has really only given the go-ahead to one media deal? The others have had a lot of trouble.
Listen, the statistics are our leadership as a country in 4G spurred so much innovation. By the way, the 2016, there was $3.3 trillion globally in the mobile economy. It was driven by what we did. Uber, Snapchat came out of the 4G leadership. Facebook, Amazon, these companies grew because of. Now, in 5G, right now, what's going to be critically important, we're going to invest $40 billion over the first 3 years. We're going to take the 2.5 gigahertz spectrum from Sprint and the 600 and create a mobile layer that's going to drive this leadership. We expect what we do will then force AT&T and Verizon and others to invest significantly. Because what's happening right now, we talked about this last time, this millimeter wave deployment that Verizon and AT&T is doing, how about this? Do you know that if they wanted to do that nationwide, including rural America, it would cost $1.5 trillion. So it's a scam.
John Ledger there, and joining us now for more on this deal, I want to bring in Bloomberg's Caroline Hyde live in London. So obviously, investors are concerned about regulatory issues here, Caroline, but if this does go through, it could dramatically reshape the U.S. telecom industry. Let's dig a little bit deeper into what exactly we're looking at.
Yeah, what we're looking at is 4 becoming 3, Emily. What we're looking at is, if you dig into the Bloomberg, look at Bloomberg Intelligence's focus on telecoms, you'll see how the slices of the pie could start to shift around. And overall, we could start to see a merging of the 2 key pies eaten at the moment by the SoftBank-controlled Sprint and indeed the likes of T-Mobile. So check out my terminal at the moment, because you are going to see this change in how the control is, the 4 key holders down to 3 key holders and overall US playing. And I think this is what is concerning overall the Department of Justice, most likely, and they've got to get it through the FCC. Back in 2014, the Obama administration at that point was overseeing this, and we saw that the DOJ couldn't swallow that pill of 4 slices of pie becoming 3. They were worried about lack of innovation. They were worried about price competition. They were worried about the effect to consumer. And this is why you're hearing John Ledger really tackle those issues front and center, Emily. You're hearing him talk about the fact that they can add jobs, of course, music to Donald Trump's ears, the fact that they can add innovation by focusing on 5G, another key priority for the administration at the moment. But it's whether the Department of Justice, which is already looking at potential market manipulation by Verizon and AT&T, the other 2 big players, they're going to be really worried about a narrowing of the pool here.
This has been years in the making. Why now? Why is this time it going to work?
Well, in terms of why this is a pleasant pill for SoftBank and Deutsche Telekom, which are the 2 foreign owners to swallow, I think it's because they've managed to iron out their issues over control. Before, it's not once, it's not twice, it's 3 times that Masayoshi Son, the controller of SoftBank and owner of Sprint, has tried to get this deal done with a combination with T-Mobile USA. And before, he hasn't been willing to let go of control enough to satisfy Deutsche Telekom. This time, it looks as though he has. They will maintain 27% stake of the overall combined company, whereas really here Deutsche Telekom comes out trumps, because T-Mobile, Deutsche Telekom will hold some 42% of the control of the overall business. We have really T-Mobile US and Deutsche Telekom in the seats of power. We have the chairman will be Tim Höttges, who is the chairman and CEO of Deutsche Telekom in Germany at the moment. You will have the CEO John Ledger remaining the CEO of the combined company, the COO of T-Mobile remaining the combined company's COO. So they remain in control, and that's what seems to have been done here.
And consolidation is a theme that's been happening in Europe as well. I mean, quickly, give us the lay of the land in sort of what you're seeing over there in parallel.
Yeah, I think this this is what is the frustration of European CEOs, one of them being Tim Höttges, who, of course, is a leader of Deutsche Telekom. He has many a time at Mobile World Congress, the key European conference here, talked to me about the need for more consolidation in Europe. Why? Because average revenue per user, the amount of profit basically they can wring out of us as users in Europe, is much less than in the US and Japan, because the markets are far smaller in Europe. It really is a broken up, fragmented market in Europe where you have 4 to 3 players in smaller countries. They can't get the economies of scale. They want more consolidation, as you see in US and indeed in Asia.
All right, Caroline Hyde for us in London. Thank you so much, Caroline, for that update and that context. Now, a story we continue to watch. According to the Washington Post, WhatsApp founder Jan Koum is planning to leave the company. This, according to people familiar with internal discussions. Koum disagreed with parent company Facebook over WhatsApp's strategy and Facebook's attempts to use its personal data and weaken its encryption. We know his co-founder Brian Acton has actually been very, very vocal and tried to launch a delete Facebook campaign. Now, we continue our own live coverage from the Milken Institute Global Conference. We're going to speak with Microsoft Chair John Thompson about joining Lightspeed Ventures as a partner. That is next. And coming up later this hour, U.S. Treasury Secretary Steven Mnuchin will be joining the show to talk about trade, the dollar, and economic growth in the United States. This is Bloomberg. We are live from the Milken Institute Global Conference in Beverly Hills, California, and Microsoft Chair John Thompson is joining one of Silicon Valley's hottest venture firms as a partner. Thompson has announced he'll join Lightspeed Venture Partners. Since taking over as chair when Microsoft co-founder Bill Gates stepped down in 2014, Thompson has played a critical role in supporting a bid by CEO Satya Nadella to modernize the software maker. At Lightspeed, he'll have a range of companies to work with. The firm's investments include Snap, Honest Company, and AppDynamics. Lightspeed's most recent fund of 2016 has $1.2 billion under management. Joining us now, John Thompson. So, big move for you. Why Lightspeed, and where will your areas of investing focus be?
Well, Lightspeed, because they were investors in my last company, Virtual Instruments, and so I've known a number of the partners for the last 8 or 10 years. They tend to invest in areas that are very, very much of interest to me. And it's all around enterprise infrastructure related technologies. And so security, infrastructure, storage, all of those things are things that I have invested in either personally or when I was running Symantec, we acquired businesses in that space. So this is an opportunity for me to keep learning and to hopefully help the Lightspeed team along the way.
Are you concerned about the potential for increased regulation and how it will impact tech companies, large and small, but really as big as Facebook, as big as Microsoft?
Yeah, I think the recent incidents certainly have raised the issue of regulatory oversight, and there may be some that will evolve, but I wouldn't let that distract me if I was the CEO of a tech company. It's all about executing against the plan that you have in place. I think there is an issue that looms on the horizon for us, and that's all around privacy. And how are we going to manage privacy in a different way in a world where everyone is connected and the amount of digital content being parsed from that connected world is really, really significant. And so something is likely to happen. I just don't know what or when.
What would you like to see tech companies do about privacy differently than they are doing today?
Well, I think tech companies should respect the information about me or you.
But what does that mean?
That means they don't sell it, they don't share it, they do it in a way that's relevant to the needs of their business. Now, many of them make money off of ads, and therefore they have to kind of use that as a leverage point. But at Microsoft, we don't do that. We don't believe in that, and I think more and more tech companies need to think about what their policy should be around that issue.
So Facebook says over and over again they don't sell your data. They essentially rent it, though. And is there something fundamentally broken about that model?
I'll let Zuckerberg explain that to you.
So let's talk about the cloud, because 2 years ago you said you wanted Microsoft to move faster in the cloud. Where have you seen progress, and where would you like them to still continue to move even more quickly?
Well, I think it's part of the role of being the chairman of the board is to be impatient. And so my comment a few years ago was about that statement of impatience, if you will. The company's made phenomenal progress. Our commercial cloud business is doing very, very well. They've got a very, very strong IoT presence now, and they're doing a lot more in that space. And so
still behind Amazon in a big way.
Amazon was a first mover, and so it takes the second mover a little while to catch up. But I think we're making the kind of progress because our growth rate is certainly stronger than Amazon's at this point in time.
How bold should Microsoft be in acquisitions?
I'm sorry.
How bold should Microsoft be in acquisitions?
Well, that's a tough question. I think the company has an enormous amount of capital, and so they have the capacity to go out and acquire a lot of things.
Right, and extra overseas cash now as well.
Well, most of that cash is now back, and so the real question for Microsoft is not about the availability of cash to do acquisitions. It's more, how does an acquisition fit into what you're trying to accomplish? If you look at the Nokia deal, Steve felt very strongly about being in the mobile business, and therefore that was an important thing to do. If you look at the LinkedIn deal, Satya felt very strongly about being in the social media business, and LinkedIn has been a wildly successful transaction. So if we can do another LinkedIn, I'm all in.
So any areas in particular that you're interested in? I mean, obviously Nokia didn't work out. LinkedIn, you say it's working. We'll see, some time should pass. Yeah. But, you know, where would you like to see them?
Well, I think anything that strengthens our relationship between our cloud and a broad network of users. So IoT, doing commercial cloud things that for financial services or industries that generally have not moved to the cloud, those are the places that represent big opportunities for us.
What should Microsoft be doing to advance more quickly in the emerging world of AI?
Well, Microsoft has a huge investment in AI and machine learning. And if you look at the most recent restructuring of the company, we allowed Harry Shum to continue to run AI as a research operation, but we also integrated many of the functional components of AI into the operating teams that are driving the revenue day in and day out. And I think what you're going to see is AI and machine learning become a prolific or important part of, if you will, every single platform that Microsoft and every company in the industry has. AI will be the future of technology for sure.
And do you see the negative side of AI, or do you think it will be more positive? And is it up to companies to be responsible in the same way we need to be responsible about data and privacy?
Well, I don't think any of us anticipated 25, 30 years ago that PCs would turn into what they've turned into. And we couldn't anticipate that, just as we can't anticipate what AI might do. But what we do know is that the digitization of the world is accelerating. And so AI is going to have a more powerful impact than we might have ever envisioned 2 or 3 years ago. And we will know in a few years just how impactful that'll be.
All right, John Thompson, Chair of Microsoft, just joining Lightspeed Venture Partners. Thank you so much, as always, for stopping by.
Nice to be here.
Great to see you. Okay, coming up, we continue our coverage from the Milken Global Conference. Next up, we're sitting down with Oath CEO Tim Armstrong. This is Bloomberg. From the Milken Institute Global Conference in Beverly Hills, California. And Oath, a new media company under Verizon, just launched about a year ago, aiming to partner with brands and disrupt the industry. Where do things stand now? We're joined by Tim Armstrong, CEO of Oath. And before we go there, I have to ask you about this Sprint T-Mobile merger. What you think it means and what it means for Verizon?
Yeah, I think Sprint and T-Mobile obviously is something Verizon will watch closely, and I think it's too early to comment on. And really, I think for one thing, it just points to how important the landscape is overall. And you look at what Verizon has done in terms of their investments and where they're going in 5G, and also what they've been doing with Oath. So I think it's an exciting time in the industry, and I'm sure Verizon will have more to say about it. But right now, it's everyone's digesting the news.
So shares are down, given concerns about regulators stopping this deal. Should they?
I think overall that's not something. I just was on the phone with Lowell McAdam for an hour talking about business stuff before I came in here, and I think it's business as usual at Verizon right now overall, and there's a lot of exciting stuff. Verizon had a great Q1, as you saw, and there's a lot of exciting stuff coming later this year, both at Verizon and Oath. So I think we're kind of all hands on deck on the operating the business side, and whatever the effects of a deal are going to be. But We have one of the highest quality groups of consumers and network of 100 million people on Verizon, 1 billion people at Oath. So we got a lot to do.
So let's talk about Oath. When you launched this, there was some skepticism. These are sort of the combined shells of Yahoo and AOL. How have things actually progressed over the last year?
Sure. So we're coming up on the year anniversary in a couple months of the deal. Things have gone very well. It's very few companies on the planet have 1 billion consumers and billions of dollars in revenue as an internet company. And I'd say the biggest thing is we're reconnecting the Yahoo ecosystem together. Yahoo had started to pull some of the Yahoo brand off of some of the news products and things. We're bringing Yahoo back together. AOL has been a power brand for us, Huffington Post, TechCrunch, and our ad systems. We are coming out with more new ad systems this year and integrating the companies together. So I'm super excited. The first half of the year is going to be bumpy because we're still integrating. Second half of the year will get to growth, and we're gonna do exciting things. I think the team is really excited. We just hired a guy named Guru Gaurapan from Alibaba to come in and be president and COO. So it's allowing us to both visionary-wise start to operate the company at a different scale level.
Verizon CFO said the assets are still being sorted out. We saw Flickr get sold. Are we going to see more of that?
We are majoring in the majors, so we're very focused on what are the big assets we have and where's the industry landscape we can play in. And if you look at news, sports, finance, entertainment, overall, those are giant audiences. Yahoo Finance, one of the largest used finance products in the world. Yahoo Sports, one of the largest sports properties. So between all of our verticals, we have tremendous size audiences that are on mobile, on the internet, on OTT, and we have a set of announcements tomorrow night in New York City is our new front. So people will come and see a huge fleet of new content properties and that we're going to launch in video. And two is we have a new special thing we're going to be announcing around 5G tomorrow with content.
So speaking of the new fronts, the CFO also said the display ad business was down, but that momentum is expected to build. Where are the bright spots when it comes to the ad business?
Yeah, so the bright spots in the acquisition really around the scale of video, scale of mobile. We had the fastest mobile traffic growth we've had in Q1, really in the history of the company, especially in places like sports and finance. So you'll see basically us in mobile and in video and display advertising with a set of new ad features that'll be rolling out this fall. So I'd say right now, I'm happy, really happy with the progress, really happy with the talent. And I'll be really excited when we come out with the products that meet our scale. And really, there are places where AOL did a better job monetizing than Yahoo, places where Yahoo did a better job than AOL. So putting Oath together allows us to combine to what will be a formidable ad system I think, to Google and Facebook and Amazon over time.
All right, Tim Armstrong, CEO of Oath. Great. We'll check up with you in at least, hopefully not another year. Thank you so much for stopping by. Coming up, we continue our coverage of the Milken Global Conference here in Beverly Hills. We'll sit down with U.S. Treasury Secretary Steven Mnuchin. That's coming up. This is Bloomberg.
I'm Kaylee Lines, and you're watching Bloomberg Technology. Here's a check of your first word news. In Jordan today, Secretary of State Mike Pompeo warned about the threat of Iran, saying Tehran is responsible for instability across the Middle East.
This morning, we had a chance to discuss how best to counter Iran's malign influence and activity in the region. And with all of our allies, we've had discussions with respect to the JCPOA.
Israel's Prime Minister Benjamin Netanyahu says his government has obtained documents proving that Tehran lied about its nuclear ambitions before signing a 2015 deal with world powers. President Trump is to decide by May 12th whether to pull out of the deal. Britain's new Home Secretary vowed today to find a solution to the immigration scandal that led in part to the resignation of his predecessor, Amber Rudd.
I want to start by making a pledge. A pledge to those from the Windrush generation who have been in this country for decades and yet have struggled to navigate through the immigration system. This never should have been the case, and I will do whatever it takes to put it right.
And South Korea has decided to permanently remove loudspeakers blasting propaganda from its border with the North and expects Pyongyang to do the same. The two Koreas pledged to achieve a nuclear-free peninsula last week. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Kaylee Lyons. This is Bloomberg. It's just after 5:30 p.m. here in New York, 7:30 Tuesday morning in Sydney. I'm joined by Bloomberg's Paul Allen with a look at the markets. Paul, good morning.
Morning, Kaylee. Well, US stocks ending on a down note today. We've got the S&P weaker by about 0.8%, the Dow off 0.6%, as pharmacy stocks in the main weighing there. The Nasdaq also weaker by about 0.75%. Of course, Apple reporting later on today. We'll have iPhone 10 sales in focus. As for how we're shaping up in this part of the world, a lot of markets closed in Asia today, but Japan and Australia still trading. ASX futures weaker by about 1/3%. Nikkei futures also slightly weaker. Not a lot of change to the Aussie dollar. The US dollar, meanwhile, continues to strengthen, heading for its best month since November 2016. Let's have a check-in on commodities, and aluminium making a guest appearance again. Its biggest monthly gain in 7 years, now on track for its highest close since 2014. So those prices continue to recover. Oil also strengthening above $68. This is on Israel's warning that Iran lied about its nuclear program between 1990 and 2003. Locally here in Australia, watching out for the Reserve Bank's decision. We're expecting to stay on hold at 1.5% for a 20th straight month. I'm Paul Allen in Sydney. More from Bloomberg Technology next.
And this is Bloomberg Technology. We are live at the Milken Institute Global Conference in Beverly Hills, California, where we have been speaking with some of the top newsmakers. Last year, Alibaba chairman Jack Ma promised that his Chinese e-commerce giant would create 1 million U.S. jobs. We spoke with Vice Chair Joe Tsai to find out what a trade war would do to that pledge.
This will actually kill a lot of jobs in America if there's a trade war, because the tit-for-tat trade tactics really will cause a retaliation. And in fact, in China, they have just put on tariffs on soybeans. It's going to hurt American farmers. I think we're in a context where we're seeing a huge market in China. And it's kind of ironic that the U.S. administration is putting on a trade war right now because there are a lot of consumers in China, 300 million. President Xi Jinping last year at Davos said that over the next 5 years, China is going to import $8 trillion worth of goods. Because of the trade war, they put the gates down because of retaliation, this is going to hurt everybody. And it's going to close off a lot of opportunities for producers in the United States. Alibaba and Jack Ma have said that they plan to create 1 million jobs in the United States, but Jack warned that may not happen if a trade war moves ahead. Are you pulling back on that? Will those jobs not be created if the president stays the course? Well, Jack has said that we're not going to create 1 million jobs. We could possibly create 10 million jobs if the trade flows are open. But if there are trade wars, if there are opportunity for small businesses that are being shut off because there's a trade war, then the consequences could be quite severe. So the jobs will not be created, is what you're saying? Well, I'm not an economist and to work through all those ramifications, but certainly you would be creating fewer jobs than if there were no trade war. My conversation there with Alibaba Vice Chair Joe Tsai. Now to Apple, getting ready to deliver its second quarter results Tuesday and getting a bit of a boost in Wall Street's eyes. Shares of the Cupertino giant rose over 2% in trading Monday, marking its largest intraday gain in 3 weeks. Now, as for what to expect from Tuesday's results, Bloomberg Tech's Mark Gurman takes a look.
It was supposed to be the iPhone to end all iPhones, the pinnacle of a decades-long evolution for Apple's crown jewel.
iPhone 10. It is the biggest leap forward since the original iPhone.
But according to some analysts, it hasn't been such a hit. And now the world's most valuable company is feeling the heat from investors. Apple shares have declined sharply from a March high, and investors and analysts are concerned that the $999 iPhone X isn't selling too well. Why? Well, some tech watchers are pointing their fingers at a few factors. Key component makers like TSMC, AMS, and STMicro have all reported lower than expected revenues. Further, the three main iPhone manufacturing partners, Foxconn, Pegatron, and Wistron, are all reporting lower than expected growth. All of this has led one analyst to declare, the iPhone X is dead, but not so fast. The reality is actually far different. The X isn't dead, though it's likely too expensive for some consumers. Still, Apple's looking at reported sales of around 53 million phones, according to some estimates. That's a 5% jump from the year-ago quarter. Even for a company with the size and maturity of Apple, any revenue growth is a plus. Still, Apple's trying to address the fact that the age of the smartphone might be slowing down. Remember when the iPhone 8 launched last year, it didn't look much different than the iPhone 6? And combine that with the sticker shock of the iPhone X, Apple left some room in the market for some iPhone users not to upgrade their devices this past year. Apple clearly recognizes this and is working to remedy that. This fall, the X's getting a giant upgrade, literally. And the Cupertino giant is planning a low-cost model, more importantly, that looks and acts a lot like the iPhone X. And all of that might just be enough to keep Apple on top until its next big product reveal.
And we are calling it iPhone.
Bloomberg Technologies' Mark Gurman there. Coming up, we're going to continue our coverage from the Milken Global Conference in Beverly Hills. Our sit-down with U.S. Treasury Secretary Steven Mnuchin is next. This is Bloomberg.
We wanted to make something that's cutting edge and is going to make the world sit up and take notice.
It's diversified, it's a true ecosystem.
You're really changing industries and you're changing processes. You need those skills, you need that information.
Bloomberg Technology. I'm Stephanie Flanders, Senior Executive Editor for Economics at Bloomberg, and we're live from the Milken Global Conference, where I'm joined by the U.S. Treasury Secretary, Steven Mnuchin. Mr. Secretary, thanks for joining us.
Great to be here with you.
You've been talking to a lot of people here about heading off to China. You're going to be looking for what from the Chinese? Is this their last chance, this delegation, to prevent tariffs?
Well, I'm looking forward to very frank discussions on the trade issues and to continue those discussions and see if we can reach a mutual solution to this. I think the good news is President Trump and President Xi, since Mar-a-Lago, have been talking about the trade imbalance. President Xi acknowledged that our objective is to have a more balanced trading relationship. I think the two presidents have a very close relationship, and I'm going over there with our large economic team to see what we can get.
If I were the Chinese, though, and I were listening to that team that you just described, it's going to be you, it's going to be the U.S. Trade Representative and Advisor Peter Navarro. Often hear rather different things from all of them.
And Larry Kudlow and Secretary Ross.
But so if I were, should I be listening to you if I'm the Chinese trying to prepare for these conversations, or listening to Peter Navarro? Is there a united front between you?
You should be listening to all of us. So what I would say is we have a terrific economic team. We meet almost daily on these issues. We meet with the president regularly. I think it's good to have a diversity of opinion, and when we go over there, we will have one voice.
And what is success? What is success? When you're on your way back, what is success?
I think you'll know it when you see it.
Well, of course, before then, we're a few hours away from potentially that exemption from the tariffs, the steel and aluminum tariffs, expiring for the European Union and for a bunch of other countries. Can you tell us where you are on that? When are we going to get a decision?
Again, I expect you'll see a decision later today from the president. We had a good meeting of the economic team with him, talking about these issues, and I'm obviously not going to get ahead of the president on his announcement.
But I think people listening, I mean, we know that the European Union, they're certainly saying that they're resigning themselves to not getting that exemption extended, and they have a very clear list of retaliatory tariffs that they have for themselves against U.S. exports. Are you modeling that at Treasury? You must be thinking about the impact on the U.S. economy.
You know, again, what I would say is we've been having very good discussions with our counterparts. I was at we had all the G20 finance ministers in Washington, D.C. last week for the IMF and World Bank meetings. We had very good meetings with President Macron and his economic team. I then went to Paris for a terrorist financing conference where I was with the finance ministers of the UK, Germany, France, and Canada. So we've been having very direct conversations over the last 2 weeks on these issues.
But as we get to these deadlines, sooner or later you don't have the phony war anymore. We actually potentially could have these tariffs. You know, how do you think about the impact on the U.S. economy if there's retaliation? We've already seen U.S. domestic steel prices going up relative to European ones in anticipation.
Well, first, let me just say I'm not going to comment on the president's decision. It will come out soon. And as it relates to any time you go to negotiate, and I use the example, 6 months ago people said we were being too aggressive on North Korea. We had the strongest sanctions on North Korea that ever put in place. Those sanctions are what got him to the negotiating table. We're at a historic event. North Korea and South Korea talking about having peace, the president sitting down with him and talking about them now being willing to give up their nuclear weapons versus 6 months ago, he was testing nuclear weapons and shooting missiles over Japan. You have to be willing, if you're going to negotiate and have changes, you got to be willing to go through with difficult decisions and having maximum pressure.
So you mentioned the sanctions. I mean, another area where we've seen the sanctions with regard to Russian individuals, Oleg Deripaska, the sanction against him actually did rile the aluminum markets because of potential impact on Rusal, the big producer. Are you any closer to an agreement on that? And what would constitute him relinquishing control of that company?
Sure. So let's just step back and let me comment. First of all, we've had a very broad sanctions program against Russia for the last year under our Ukraine sanctions program. Congress passed the CATSA law, overwhelming amount. Under that, we had to write the report on the oligarchs and the political figures. We had a both classified and unclassified report. We went through a very long process. Rusal was picked up, not because we were targeting Rusal, but because we were targeting the ownership of Rusal. So we understood the impact that this would have on a lot of hard workers there. We've extended the license with Rusal to try to deal with these issues. The company has petitioned us for delisting. And I'm not going to comment on the specifics of what that would entail, but one of the issues will be selling down the majority interest.
But just to push you a little bit, because it's obviously people are concerned about what this, because it would really be for the survival of that company, whether or not it's party of this to these sanctions. If Oleg Deripaska is still some form of shareholder, but a minority shareholder, is that okay as far as you're concerned?
It wouldn't be appropriate for me to go through the exact details of what will be okay and what won't be okay. There's lots of facts and circumstances that we're discussing. The first aspect would be that he sells down below 50%. And again, we're having conversations with the company. Obviously, we found those discussions encouraging, and that's why we extended the license to allow the company to have time and us to have time to deal with these issues. Our objective was not to put Rusal out of business, and that's why we extended the license.
Well, you're the Treasury Secretary. You can comment on the Treasury market. We have the quarterly refunding announcements this week. We've already seen that the first quarter of this year was record borrowing by the Treasury. Are you concerned that we're now looking at a lot of factors putting the Treasury market in a very different place this year from last year?
No, I think the good news is the U.S. Treasury market is the most liquid and robust market in the world. And while I won't comment on interest rates because I respect the independence of the Fed, what I will say is the market, the forward curve, expects interest rates to go up. How much it goes up and how fast it goes up, we'll see whether it's more or less than the market predicts. But part of the reason why we see interest rates going up is because we've created economic growth. That's a good thing. So we've been focused on targeting 3% sustained GDP. And part of the reason why interest rates have backed up is because of that economic growth.
But Bob Michael, the head of fixed income for JP Morgan Asset Management, he said on Bloomberg this morning he'd never seen as bad demand and supply conditions in the Treasury market, with so much supply coming on, and also central banks, the Federal Reserve, others running down their balance sheets. So many things coming together.
Well, let's just say again, it's a very large, robust market. It's the most liquid market in the world, and there is a lot of supply, but I think the market can easily handle it.
I think just when we think about what are the potential bumps on the road that you could have in terms of the global economy or markets, there's always been a lot of concern about how this more normal monetary policy was going to play out in the long term, in long-term yields. If you see yields going to 3%, we saw markets responding to that. For you, is there a danger level that you think of? It's not 3, but is it 4? What would worry you in terms of really causing a pressure in the financial markets?
Well, let me just say I have tremendous confidence in Chairman Powell and his leadership at the Fed. And again, lots of these issues are interrelated. It depends on where inflation is. It depends on where growth is. It depends on where unemployment is. There's lots of issues that are all interrelated, I'm sure, as they look at monetary policy.
But the factors that are coming into it is that you have maybe reduced demand and a big increase in supply. That's quite basic, and that's actually independent of the Fed policy. We're not just commenting on the Fed policy. We're talking about the amount of supply that's going to be washing.
Well, by definition, supply and demand will equate.
Well, it could be at a very, very high rate in terms of.
I'm not concerned about that. I think there are still a lot of buyers for U.S. Treasuries.
Okay. If you're, what you mentioned about inflation, I mean, again, is that something, we've had some signs from the Fed, without commenting directly on their policy, that they're willing to see inflation be over target for a certain amount of time to let the economy run. Is that something you're relaxed about? Do you worry about inflation now picking up?
I think a little bit of inflation is a good thing. I mean, for a long time, the Fed was targeting higher inflation. I mean, clearly one of the aspects of the tax plan is we want wages to increase. The last 8 years have been great for the financial markets. They haven't been great for the average worker. They haven't seen wages increase. A little bit of wage inflation is a good thing. I think energy prices have the potential to, as we become energy independent, I'm not concerned about energy inflation. So I think there's lots of good signs on the horizon.
I'm interested you say that about the energy price inflation, though, because the oil price is up 65%, I think, since last summer. And we haven't necessarily seen a big amount of U.S. supply coming on stream, as a lot of people thought it would when prices went up. They did think that the U.S. supply would kind of be offsetting that. So are you a bit worried about what's happening to oil prices? Because that's affecting working households in the U.S. potentially more than the tax cut.
Again, what I'd say is, we got a lot of liquid gas, liquid natural gas. There's a lot of alternative energy, coal, clean coal. There's a lot of opportunities in the energy markets, and I'm not going to speculate on where oil prices are. But, when oil prices were in the 40s, people were saying they were going to 20. So I'm not good at predicting where they are. But we haven't really seen energy prices and energy inflation as a result of oil prices going up.
We have seen, one of the other factors that worries people a little bit is, you can have these sanctions and other things that the administration does, which then have quite a big impact on markets in the short term. We saw it with aluminum prices, we saw it with steel prices. As we go into this Iran potential increase or return of the full sanctions against Iran in May, are you thinking about how to lessen an impact on oil prices from that? Because that could push up oil prices.
I just want to separate sanctions from tariffs. So sanctions are very, very important economic tools that are used for national security and foreign policy. As you know, they're very impactful. That's why they worked in North Korea. They worked in Iran last time. That's why Iran came to the negotiating table. President Trump is determined that Iran won't have nuclear weapons now. They won't have them in 5 years. They won't have them in 10 years. So, again, I look forward to the president's decision on the JCPOA. But, that's something we're having conversations with our allies about.
But how concerned would you be about a short-term impact on the oil price? Even if you think it's justified, even if you want to push ahead with that foreign policy, you still have to think about the short-term dynamics, especially given that we've had the oil price rises recently.
It's one of the things we look at.
One of the things that we've seen also in the last few months is the trade deficit still going up, soaring in fact over the last year against the backdrop of all this trade talk. Do you really think that these sort of the trade negotiations that you have can possibly affect the macroeconomic forces that are pushing up the US trade deficit, the US so strong, sucking in imports?
Well, the president's economic plan has always consisted of three parts: tax reform, regulatory relief, and trade. Part of the reason why the trade deficit has gone up is because the economy is growing as a result of the impact of tax cuts. So that's a short-term issue, which, again, it's the unintended consequence of a growing economy. We're very focused on trade and turning that around.
But do you worry that you're going to have all these trips and you may come back with all of these bits of paper saying, we've got all these deals. Meantime, that big dynamic that you just talked about, the fact that the US is strong, it's sucking in investment, sends the trade deficit sky high.
I think if we can get the fundamental changes that we're talking about, and that's what the president is looking for, it will deal with the trade deficit.
Okay, so we've talked about oil prices, we talked about the Treasury market, inflation. There's always something that ends up causing the next recession. We know there will be another recession, not necessarily anytime soon.
One thing about this is we're never very good at predicting what it is.
Well, what do you think about as being, just for you, given your experience in the markets, what do you watch as something that you think in this cycle could be the biggest risk for a recession?
I think the issue is, and again, I think in this cycle, the risks are relatively low because credit quality is very good, liquidity is very good, banks lending is very strong. So the next issue is going to be something that we don't anticipate.
Treasury Secretary Stephen Mnuchin, thanks very much for joining us here at the Milken conference. We'll have more coverage ahead here from the Milken conference, but this is Bloomberg.
45% of the S&P 500 members